Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news both superpowers are dicing with unsustainable budget deficits that are poised to explode. The Moody's downgrade was just a teaser. The bond market will make the real judgment. But first today, the overnight dairy auction brought the expected settling of prices, even though they remain high. They dipped overall by 0.85% on the low volumes offered, but with the backdrop that the European season is currently at its peak. Whole milk powder and skim milk powder both dipped minorly, and as signalled in the derivatives market. The cheese price sank 9.2%, however, but it had probably gotten excessively high in prior events, so an unsurprising correction. Chinese buying presence was a feature of this event. US resale sales rose 5.4% last week from the same week a year ago, but this is clouded by the unknown impact of their new tariff taxes. It is their slowest rise since late March, and the impact of tariff taxes will be starting to show up now. So it could well be that retail sales volumes there are starting to decline now as a consequence. On Wall Street, there is growing nervousness about how the federal government's budget is being planned. If it goes through as the administration is proposing, the US deficit is set to balloon sharply, and the bond market will have something sharp to say about that. In Canada, their inflation rate fell to 1.7% in April, but there was a special one-off factor that helped it. It dropped from 2.3% in March, not quite hitting the expected 1.6% April level. But a large part of the drop was in energy prices, not only because the oil price is easing, but also they removed the consumer carbon tax there. Food prices were up 3.8%, however, especially the cost of fresh food. And China has cut its key lending rates to record lows at yesterday's May fixing. The one-year loan prime rate, the benchmark for most corporate and household loans, was lowered by 10 basis points to 3%. While the 5-year loan prime rate, which is the basis for mortgage rates, was cut by the same margin to 3.5%. These changes were what markets were expecting, and the first reductions since October. It is another in a string of monetary easing measures announced earlier this month. That official move was immediately followed by its 4 largest Chinese state-owned banks, who cut deposit rates by between 5 basis points and 25 basis points. Those 4 core SOE banks are the Bank of China, China Construction Bank, and ICBC, all of whom have New Zealand subsidiaries, and their Agricultural Bank of China. Other banks followed. Money is flowing out of savings accounts now, back to higher earning wealth products, a move that in the past has been fraught with risk. And the US isn't the only superpower flirting with deficit spending danger. China is too, as its fiscal stimulus pushed its 4-month budget deficit to a record high of 2.65 trillion yuan. And there is no public pushback on the wisdom of that. Malaysian exports took off in April with a strong 16% rise from the same month a year ago. If we look past the pandemic recovery growth, it was near its best performance since 2018. But it also came as imports surged, and they rose 20% to a new record all-time high. In Europe, it might have been marginal, but it is worth noting all the same. Consumer sentiment got less bad in May. This seems to have broken the 2025 run of declines in these survey results, a decline that really started in late 2024. In Australia, they cut their cash rate target by 25 basis points, as expected, to 3.85%, which they say is still at a restrictive level, just less so. Inflation and trade uncertainties are still on their mind, and the risks to their continuing expansion were more so than markets were anticipating. Governor Bullock's press conference comments were more dovish than the rate change statement, and more dovish than many were expecting. The RBA also trimmed its growth forecasts. Markets now expect at least 2 more 25 basis point rate cuts to come through in 2025. Yesterday's Bullock comments opens up the possibility of more. The US Treasury 10-year yield is now at 4.48%, up a mere 1 basis point from this time yesterday, and the price of gold will start today at $3,285 an ounce, up $58 from yesterday. And oil prices are a tad softer, at just over $62 a barrel in the US, while the international Brent price is 50 cents firmer at $65.50 a barrel. And the Kiwi dollar is now at 59.2 US cents, up 30 basis points from yesterday at this time. Against the Aussie, we're up 40 basis points at 92.2 Australian cents. Against the euro, we're down 20 basis points at 52.5 euro cents. That all means our trade-weighted index starts today at just over 67.5 and essentially unchanged from yesterday. And the Bitcoin price starts today at $106,320 and up 0.9% from yesterday. Volatility over the past 24 hours has been modest, however, at just under plus or minus 1.2%. You can find links to the articles mentioned today in the show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.